incentives are relevant for your business? How can you qualify for them and how can you maximize the benefits available to you? This is exactly what we will be exploring. So we are pleased to have Mr. Anand Parasrampuria and Mr. Somil Bansali as our guest speakers. A very warm welcome to both of you. And to all our participants, I would encourage you to actively participate in this session. And please feel free to ask all your doubts. We will take them up in end of the session. With that, let's get started. Over to you, sir.
Thank you, Puru. Good evening, everyone, and thank you for joining us. I am Anand Parasram Puria from Dhruva Advisors, and it is a pleasure to have you with us for today's session. Over next 1 hour, we are going to squarely focus on how MSMEs can benefit from various central and state government incentives that are actually available to them. We'll fairly move at a brisk pace. We have to cover a lot of ground, so I did encourage you to use the chat box for questions as we go. We have built in a dedicated time at the end of the session for a Q&A, and my colleagues are also monitoring the chat live, so please don't hold back. With that, let's go into it. Here's is how we have structured our today's conversation. It's basically divided into 4 parts. We'll start with a short introduction on relative importance of MSME landscape, incentive opportunities, importance of MSME in the overall Indian economy, followed by we'll spend some time on various central government schemes that have been announced in the past, certain schemes that are upcoming and under active consideration of the central government. The more incentives or areas of benefit under the customs regulation called as manufacturing and other warehousing regulation 2019. And third is that we'll spend our bulk of time where Somil will take you through the state government incentives. We have selected 7 key states that mostly come up during our client interaction, which is Maharashtra, Gujarat, Karnataka, Tamil Nadu, Uttar Pradesh, Rajasthan, and Punjab. And then we'll close out with an action roadmap. So what's MSMEs? It's very play a very important role in the overall Indian economies. We have more than 7.83 crores of registered MSME enterprises in India, employing more than 38 crores of people. The share of MSME in Indian economy is quite significant. They contribute to 31% of India's GDP. Okay. And they have, their share in manufacturing is roughly 35%. And in India's export regime, it is up close to 48.5%. So with this, it is important that government also recognize this contribution, and of late, governments have been framing incentive policies that also caters or provides benefit to the MSME sector. Now, when we say incentive, what is incentive? So incentive is essentially a subsidy or a tax break or some sort of central government or a state government benefit that flows into the company directly. These schemes are used by government to promote investment and create jobs. It impacts MSME in a way that it eases the working capital requirement, it provides the level playing field. And then if you look at both central and state government incentives together, can change the project economics completely. So, let's start with central government incentive scheme, the first major block of the presentation. You would have heard that, over a period of, past 5, 6 years, central government have been issuing production link incentive schemes across multiple sectors. So till date, central government have issued PLI schemes for 14 different sectors with a budgeted outlay of 1.97 lakh crore in terms of incentives, with a target to have a 20 lakh crore of incremental production and creation with a job creation target of 14 lakh people. In those schemes, till date, as per the government records, 176 MSMEs have been selected for benefits under different sectors, ranging from pharma, food processing, textile, white goods sector. Largely speaking, honestly, till now, most of the PLI schemes that have been issued by the government were, favoring capital intensive players where the investment threshold was more than 100 crores. Most of the schemes were not benefiting MSME directly. So if the thought process was that PLI is not for me as an MSME, then there was nothing wrong in that one. But what lies from an MSME perspective, even for those sectors, is that is an usually an indirect benefit is becoming an anchor company or a anchor company to a selected PLI applicant in terms of whether it is electronic sector, auto, or for instance. That helps you in getting more businesses, getting the technology transfer. Uh, and you know but then there have been certain schemes where the government has realized the importance of the MSME sector and provided relatively lesser investment threshold or sales threshold. So food processing is a very good example where the minimum sale threshold criteria was as low as 1 crore and the incentive rate was 4 to 10% depending upon the food product that was being manufactured. Similarly, for drone and drone components, minimum sale threshold was 2 crores. For drone and for component, it was zero point 0.5 CR with a 40% minimum value addition, but the incentive of say 20% of the value addition. Similarly, for IT hardware, the investment threshold was 20 crores over a period of 4 years, and net incremental sale was in the range of 50 crores to ranging, but with the incentive ranging from 1 to 4%. Uh, so these are the policies where government had recognized the importance and the objective was to build a supply chain. Most of the schemes, the application window for registrations have closed down, except for electronic component manufacturing scheme, where the investment threshold is 10 crores and the scheme is still open for project registration. The incentive is in the form of 25% capital subsidy. To take you through, ECMS, because that's the only scheme right now that is open for incentive from the central government perspective. ECMS had four target segments, which is one is sub-assembly, which is related to display and camera module assembly, bare component in terms of electromechanicals, selected bare component is in terms of printed circuit boards and all those things. But more important is, which is still open, is the supply chain and capital goods. So if an MSME player is making any component that is forming a part of the target segments A and B, it could be anything. It could be, say, certain chemicals. It could be a very small nut and bolt also, which is going into manufacturing of selected products like lithium-ion battery, display camera module, or mobile enclosures, and all those things. Those companies can still go and register with the central government for the incentive. Minimum threshold is 10 crores of investment, and the incentive being offered by the central government is a capital subsidy of 25% of investment. Uh, this window is open till uh, April 2027. The takeaway from here is if you are a component or a equipment level supply MSME where anywhere in the electronics value chain, it is very likely that you may get selected. Having said this, government has, recognized the importance of MSME and the role it plays in terms of different sectors. So there are now discussions on uh, in several incentive policies, and some of the policies are government is actively considering battery component incentive scheme. Under this policy, the entire supply chain ecosystem, which goes into manufacturing of EV batteries, lithium-ion batteries, the government is come likely to provide incentives in the terms of production link incentives. Similarly, for India Semiconductor Mission 2, the idea here is for the government is to incentivize the and setting up of the ecosystem that goes into the manufacturing of semiconductor, right from chemicals, any component or anything that is related to that goes in manufacturing of semiconductor machines or any component parts thereof, that is likely to get covered up. Of late, government has also come up with the Govardhan scheme where, to promote conversion of agriculture residue or organic or bio waste into biogas or compressed biogas. So this scheme is also on the anvil. The next scheme that is expected to come up is the construction and infrastructure equipment scheme, whereby again the idea is to incentivize uh, manufacturing of construction equipments and related components. So, the thought process right now from the government is to move away from providing incentive just for assembly and to ensure that India is self-reliant and has the entire ecosystem uh, to manufacture in key target segments, whether it is textiles or whether it is food processing or electronics, semiconductor, solar, renewable energy, and have a deep local value added chain right from start till the end, and to reduce India's reliance on imports. Apart from central PLI, government has also issued to promote manufacturing and make manufacturing more competitive. Under the customs law, there is a scheme called Manufacturing and Other Operations in Warehousing Regulation Scheme, wherein all your capital goods and raw materials can be imported without payment of duty. This is essentially a customs duty deferment scheme whereby at the time of import, there is no requirement to pay any customs duty. When I say customs duty, it includes the import IGST element as well on the imported capital goods and raw material. The way the scheme works is uh, your factory premises, wherever it is located in India, it needs to be notified to be as a custom bonded warehouse, and once that notification or license is in place, all imports into that particular factory will be free of customs duty till the time the goods are stored in that particular factory premises. So, as in when the duty liability arises only as and when the goods are moved outside the factory. So, this is more relevant more for a domestic, manufacturers in India where they import machinery. So what happens is when you import your capital goods, you store it, you install it in your factory premises, have your factory premises notified as a custom bonded warehouse. There is no requirement to pay customs duty as long as the machinery is installed in the factory itself. It could be for a period of 10 years, 15 years, nothing. Uh, what is the relevance in terms of how does it impact? So first of all, the scheme does not have any obligation or any strings attached to it. There is no export obligation under it. Even if you are selling your entire output in India, okay, uh, there also uh, there is no you can avail the benefit of this scheme. Okay, it's a simple scheme that you just need to obtain a one-time license, get your factory notified as a bonded premises. In terms of impact, it frees up your working capital. There is zero entry barrier. There is no minimum investment threshold requirement. There is no commitment. And the biggest benefit is the factory can be located anywhere. It need not be located in any or near to the customs port. The scheme can also be used for raw material. There is no positive NFE requirement like it is there for SEZ or any other notified premises. So I think this is most of the actively sought out regulations where industries are actively applying for this scheme. Apart from this, there is one more small credit link capital subsidy scheme offered by the central government. The objective of this scheme is to facilitate technology upgradation in small and micro enterprises, whereby units who are looking up to upgrade their technology and plant and machinery, they are eligible to claim the benefit of this scheme. The benefit is in terms of you get a uh, if you're applying for a loan for upgradation, technological upgradation, then 15% upfront capital subsidy is credited to your loan account. All SME MSMEs in 51 specified sectors are eligible to claim the benefit of this scheme. So this was a brief summary. Um, while apart from this, central government in the past have also issued region-specific incentive schemes. While I have not created a slide deck, but those region-specific schemes, the process for getting the project registrations have been closed. So there was a scheme for setting up a project in Jammu and Kashmir, Himachal Pradesh, and in the entire northeastern state. For northeastern states, the scheme is live till 30th September, but temporarily the registrations have been closed as the budgets have been exhausted. Uh, I'll now hand it over to Somil to take you through the state government incentive scheme.
Thank you, Anand, for taking us through the central scheme. Now, let's talk about why state incentive matter and what this scheme typically offers. So, central scheme sets the floor, but it's the state policy that decides how far your project economics can actually go. That's because state incentive are granted over and above the incentive provided in the incentive schemes. So, what does this scheme typically offer? Generally, this state policy offers capital subsidy, which is a one-time reimbursement on your investment in land, building, and machinery. Next, it provides interest subsidy on your term loan, SGST reimbursement, stamp duty exemption on your land and building deeds, electricity duty exemption, and the employment generation subsidy. So every policy we are about to discuss is just a mix, is a different mix and quantum of these six incentives. So a quick word on the thrust sectors, because this incentive in the thrust sectors are higher when your business fall into the state priority list. So on the manufacturing side, the common thrust sectors are agro and food processing, textile, handlooms, electronics, automobiles, pharmaceuticals, battery storage, and sports goods. Similarly, on the service side, there are IT, ITES, tourism, hospitality, logistic, warehousing, data centers, healthcare, and media. So, if your business sits in one of these category, you can expect higher incentive rather than the standard slab. So today we will be covering 7 state industrial policy, that is Maharashtra, Gujarat, Rajasthan, Punjab, Uttar Pradesh, Karnataka, and Tamil Nadu. So first we'll look at the comparative analysis in these schemes. So for GST reimbursement, these schemes diverge sharply. So Maharashtra, Rajasthan, Punjab offers the SGST reimbursement, but Gujarat, Uttar Pradesh, Karnataka, and Tamil Nadu does not provide GST reimbursement at all. Similarly, interest subsidy shows a similar pattern. It is interest subsidy is not present in Punjab and Karnataka policy, while other states provides it. Similarly, capital subsidy is where every state plays, but there is a capping which differs from one state to another. Then there are other benefits as well, which are the state differentiator. Just like Gujarat provides power tariff subsidy, Punjab and Karnataka provides electricity duty exemption, Rajasthan guarantees fee reimbursement, and Tamil Nadu provides quality certification reimbursement. So now for each state, I will discuss one or two most relevant points, and balance will able to see the full list of incentive on the screen. So first, let's start with Maharashtra. Here are two things which we need to know from the policy overview. First, it is targeting India's first $1 trillion state economy. And the important point to note is there's a dedicated MSME commissionerate which is purely for faster grievance resolution. From the incentive table, uh, if you see there's a reimbursement of 100% of gross SGST payable. So when I say gross, it means your GST liability before reducing the input tax credit. So this is the standout feature, which is the industrial promotion subsidy. This makes a meaningful difference in your cash flow. And there's a capital subsidy as well, which scales by zone, and it goes up to 100% of the cost in most backward zone. But the capital subsidy is capped at the lower of 25 CR or 20% of your eligible investment. And also you can see apart from this, there are other subsidies as well, which are provided by the Maharashtra industry policy. So Anand, do you want to add anything on this Maharashtra policy?
Yeah. So I think one important aspect of this new policy with Maharashtra has been, as compared to what was there earlier, is uh, two important things from an MSME standpoint. The earlier Maharashtra industrial policy, where the investment threshold was quite higher, but in this policy, there is a separate section for MSME where even a smallest investment of 10 CR or 20 CR is getting covered under for eligibility perspective, and incentives is what capital subsidy, interest subsidy, and all those have been provided. Second important aspect for under Maharashtra scheme has been that in earlier the incentives were more concentrated for setting up investments in the backward regions, and developed areas like Mumbai, Pune, Nasik were specifically excluded from incentives. There were no incentives there. But now in the new policy, uh, the incentives, though a bit lesser quantum, is available even for anything set up in Mumbai, Pune, or maybe Nasik, which are the developed areas. So these are the two important aspects that have come up in the Maharashtra policy. The third important aspect is earlier, under the incentive policies, there was always the incentives were always related to net SGST payable, okay, which has undergone a change to gross. And this was playing a very important role for units who were only having export turnover, so they were not getting any benefit. For those units which are having 100% export or predominant exports, the government has come up with a PLI kind of a setup where the incentives are in the range of 1 to 1.5% of the uh, turnover directly. Now, apart from this, in Maharashtra, they also have, while this is the new policy that have come up, But in the past, from a service sector perspective, they had issued separate policies like for tourism, Maharashtra GCC policy, which is for Global Capability Center, where the thresholds are pretty low. If anyone is setting up a shared service center with a seats of 50 people and investment of say 10 CR or 15 CR, then they are eligible for incentive. Similarly, Maharashtra has a tourism policy which is live. The other important aspect in this policy is that in earlier policies, the eligibility criteria was based on investment as well as employment that was getting generated. Now, this criteria of employment generation has been relaxed in this new policy. Somil, you can move it.
So now let's move to the Gujarat policy. So in this, the headline feature is choose your incentive model. So here you're not locked with any one particular benefit. Instead, you can mix capital subsidy, interest subsidy, and power tariff subsidy based on what suits your project. And here the policy has given the list of thrust sector which gets the enhanced treatment. Coming to the incentive part of this policy, so there is a capital subsidy which runs from 25% to 35% of your eligible investment, and it depends upon your taluka category as well. So the policy guideline defines what is your eligible investment and in which taluka category will fall. So to claim any incentive, you have to first compute the eligible investment, and on that eligible investment, you can apply the particular percentage. Then next, there's the interest subsidy, which ranges from 10% to 7% to 10% of your eligible investment. So overall, on combined basis, MSME can claim up to 35 to 45% of eligible investment. Also, there's some extra support for women entrepreneurs. So this policy will bring in new investment in Gujarat, as well as it will create employment opportunities.
So I think Gujarat also stands out because Gujarat already had a Atmanirbhar policy which was live till 2027. So what this essentially does is right now it gives industry an option to opt which policy is more beneficial. Similar to Maharashtra, even the earlier Gujarat policy had, three incentives, which is capital subsidy, net SGST reimbursement, and interest subsidy largely. But again, in the earlier policy, there was this requirement of having a minimum employment to be generated. Now, with the new policy, that condition of having the minimum employment has been done away with. So what is important for businesses or MSMEs right now who are in the process of setting up projects in Gujarat is to do an analysis of which policy is beneficial, whether the old Atmanirbhar policy is beneficial or the new policy will become beneficial to their business operations.
So next policy is the Rajasthan policy. So if you can see, this slide is titled as MSME Policy 2024. So it's worth noting that the actual fiscal benefits are not delivered by this policy. Instead, they are channeled through a separate scheme called Rajasthan Investment Promotion Scheme. So with this context, this scheme operates as one-stop shop combining fiscal and non-fiscal support, and this scheme largely focus on cluster development, quality certification, and the export promotion. With respect to the incentive, here as contrast to the Maharashtra scheme, here SGST reimbursement is available as 75% of the net SGST and not the gross amount. When I say net SGST, it means your gross liability is reduced by the input tax credit, and the balance amount which are paid in cash, 75% of that amount is available as a subsidy. And this SGST reimbursement is available for a period of 10 years. And apart from this, there are other incentives like capital subsidy, guarantee fee reimbursement, and electricity duty exemption. Anand, any thoughts on this policy?
No, nothing specific. I mean, it's an old policy.
Oh. Next is the Punjab Industrial Policy. The standout feature of this policy is the single flexible incentive framework. Here you have an option to choose this framework at once, and that framework would be valid for 10 to 15 years. Here 20% is the capital subsidy, which is capped at 10 crore. Then again there's a SGST reimbursement, which is 75% of net SGST paid. Then there is a subsidy for employment generation for 5 years. Also, there is a 100% electricity duty and stamp duty exemption during the eligibility period. Now, the next policy is the Uttar Pradesh policy. Basically, this policy is built around region-wise categorization. So, more backward the region, the higher is your incentive. Here, the investment promotion assistance ranges from roughly 10% to 25% depending on your region and enterprise size. However, that assistance is capped at 4 crore per unit. Also, there is a distinctive benefit in this policy wherein the applicant will get 100% reimbursement of employer's EPF contribution for 5 years, and that 5 years will commence from the commercial production. And there are other benefits as well, which is available on the screen.
So apart from this UP MSME, UP also has a logistics warehousing policy. UP also has a GCC policy for service sector. UP has a tourism policy. Okay, under for services sector, their incentives have been provided. So UP also has sector specific, even in the manufacturing space, sector specific policies, like say for example ECMS, which is Electronic Component Manufacturing Scheme of UP. Thereby, again, there also the investment thresholds are lesser, similar to what is there in the central government scheme. So, while we are looking at the master MSME policy for UP, it is the if we are into falling into the thrust sector, will be relevant that even those sector specific policies could also be evaluated.
So next we have the Karnataka Industrial Policy. In this policy, there are two features which normally stands out. First is the affidavit-based approval system. So as per this system, a unit can start its operation on self-declaration basis, and this can continue up to 3 years. So this is a very unique feature which is seen in this scheme. And next, there is a 15% price preference in public procurement, wherein they have listed 358 items exclusively for MSMEs. So these are the standout features of the Karnataka policy. When it comes to the incentive part, here the capital subsidy runs from 10% to 30% of the value of fixed asset. However, this capital subsidy is zone dependent. So depending on your zone, you will be eligible to claim the capital subsidy. Then this Karnataka policy also funds up to 50% of your quality and export certification cost. However, there is a capping of 5 lakh per entity. Apart from this, we have incentive for sustainability, we have incentive for power and electricity support as well. So this is all from the Karnataka industrial policy. And finally, we have the Tamil Nadu policy. This policy basically runs on the think MSME first principle. And why I'm using this phrase? Because here MSME gets a 3-year exemption from most of the approval based on the self-certification done by the MSME. So this is a very welcome move by the Tamil Nadu policy because it, I would say, reduces the application burden at the start, as MSME can start business on self-certification basis. And in this policy, with terms of the incentives, where the capital subsidy is approx 25% of plant and machinery value plus 10% top up when it is claimed by the micro units. Also, there is a payroll subsidy with 100% reimbursement of the employer's EPF contribution for the first 3 years. Also, there is a reimbursement which is 100% reimbursement for quality certification cost, wherein 2 lakhs is for the national certification, and when international certification is involved, the capping is up to 10 lakhs. So these are the main, I would say, the important subsidies which are provided by the Tamil Nadu policy. And this is what we had from the state incentive policy piece. Any points which Anand you want to add?
No, nothing for Tamil Nadu as such.
Oh. So this is the comparative analysis which we discussed in the beginning. So just to have a recap on this point, as I was mentioning, that there is a GST reimbursement in the state of Maharashtra, Rajasthan, and Punjab, but there is no such reimbursement which is provided by other states. When I say other states, it is Gujarat, Uttar Pradesh, Karnataka, and Tamil Nadu. Similarly, for interest subsidy, you can see Punjab and Karnataka has no policy for any interest subsidy to be provided on your term loan. And as we discussed, there are separate others. If you see the others column, there are separate incentives for under the separate policy. So if you see there's a power tariff subsidy for Gujarat, duty exemption, electricity duty exemption for Punjab and Karnataka, guarantee fee reimbursement in the state of Rajasthan, quality certification for Tamil Nadu. So this is a comparative analysis where you can see more or less the incentives are same when it comes to the capital subsidy, interest subsidy, and GST reimbursement with some diversification. But overall, the theme of all the state policy is to reduce the burden by providing you the reimbursement of your initial investment, as well as when your once your commercial production starts, the burden is reduced by providing the GST reimbursement. So this is all from the state policy. Over to you, Anand.
I think whenever there is an investment is being planned before deciding upon the investment or the location, it is always important to understand what all incentives that could be applicable, both from a state and a central government perspective. Look at, if there is, if the investment entails the import of any machinery or capex goods, can whether are there any customs benefit that can be looked at depending upon the business scenario, whether should I go for a mower license or should I go for an EPCG analysis, EPCG license or an advance authorization. These all things needs to be checked beforehand so that an informed decision is taken, because all these parameters, all these incentive schemes has a very uh, big impact on the overall project economics and also on the business per se, because what has been seen is essentially if you are claiming the incentive, the cost goes down, and once the cost goes down, the people or industries do have an advantage in terms of setting up the selling price and all those things. So typically what has been our experience is that whenever a client comes with an investment, there is initial phase to be done is to understand, is there a central government incentive? Okay. Is there a check a state, if if you're looking at an MP, but if UP is offering me a better incentive and there is a land availability there, then should I invest in UP and set up a factory there? So that my incentives are maximized. Then similarly, if I'm importing goods, should I go for EPCG license or an advance authorization or mover? So these 4 5 things needs to be looked in detail. and thereafter an informed decision needs to be undertaken.
And just to add to what Anand said, whenever we apply for any incentive, first and foremost is we need to perform the project evaluation. Based on this project evaluation is normally prepared considering the incentive guidelines which are provided by respective state. So this helps us to determine the quantum of incentive which can be claimed under any policy. This is the first and foremost step which everyone needs to undertake. Once that is determined that we are eligible for the incentive amount, then the next step is to check on which site this application needs to be made. So in this digital era, every application needs to be made online. So different state might have different website on which this application needs to be made. And normally what we have seen practically is all the steps are provided in the guidelines basis which you can make an application online. And once this application is made, we need to coordinate with the relevant authorities under this state policy framework so that our application gets approved. And in case they have raised any queries, then it is very important to address these queries because each state policy have a specific timeline within which you need to respond to the queries. And failure to do so, there are chances that your application might get rejected. So it's very important that once you make the application online on the designated portal, you check those application periodically to avoid or to reduce the rejection risk. And once this policy or your registration is accepted, then upon commencement of your commercial production, you can start claiming the incentives under the on the same designated portal. So yeah, that's it from this state incentive bit.
Just to add on, I mean, as we were speaking, central government has formally notified the mobile manufacturing scheme, whereby for mobile producers they have incentivized 2.5% to 5%. But important element for MSMEs to track is that those manufacturers get an additional incentives for sourcing specified components and sub-assemblies domestically. So I think it is important that we track these incentive schemes in terms of not only the MSME's own eligibility, but if your customer is also eligible and getting an additional incentive, then you could also get benefited in terms of higher business from them.
So yeah, with this we
Thank you,
can
Anandji and
move
Somilji,
on.
for such an insightful and practical session. I think this discussion has highlighted something very important for businesses, that incentive should not be looked as an afterthought. So now we will move to the doubts. So I will request the speakers to please take the doubt from the chat box as well as, yes, from the chat.
Yeah, so there were questions in the chat box. Is that what are the central and state specific incentive for services sector, warehousing, MSME support sector? So unfortunately, for services, no central government incentives have been prescribed as such. For services, state governments have for specified sectors issued incentive policies. Multiple states have come up with incentive policies for logistics and warehousing. Then there is an incentive policies for GCCs, which is Global Capability Centers or Shared Service Centers. There are incentives for hotels and tourism, where which covers not only just hotels, the entire tourism ecosystem, right from, say for example, your amusement parks, two-star hotel, three-star hotels. So listing is wrong. For these are the three sectors where predominantly service sectors where the state governments have come up with incentive policies. Most of the state also have an ITNS policies where there are certain exemptions given in the form of electricity duty, but those are not significant. Then there was this question on whether the GR for new Maharashtra industrial policy has been issued or not. The operational guidelines or the formal notification for the new Maharashtra industrial policy is unfortunately not been issued. We do expect that this will come up in next 1 to 2 months timeline. There is nothing in terms of incentive policies for franchisees. There is no state or no government that has issued any policy for any franchisee setup type of a setup. They have identified specified sectors, whether it is IT-enabled services, tourism, and all those things, which are essentially there. For Orissa, we will get back to you separately. For this session, we picked up 7 key states. So we'll get back. But Orissa also has incentive policies, which is similar to the other states for industries and maybe for tourism as well.
We have doubts in Q&A box as well.
Puru, I've tried to cover those points from the chat box.
Sir, there is a recent doubt from Ronak. Hi, we are Maharashtra-based company. We are engaged in manufacturing of organic product. We have established our new factory. As of now, we have invested in 6 CR land and building, which we have capitalized. Now we have planned to invest 6 CR in next 2 years. Can you suggest any scheme which we can apply?
So, for you to answer this specific query, the new Maharashtra industrial policy is the scheme that can be looked up. Okay. Where the investment threshold or investments up to 125 CR would be eligible for incentives. The type of incentives will typically be as specified in the deck. But exact quantum we'll have to look into, for the exact location, what qualifies investment that you have been done, so that we can do it. But yes, definitely you can look at the new Maharashtra industrial policy for applying incentives in that policy.
Sir, in the chat box, we have one more.
Unfortunately, for solar installation, apart from this PM Surya Ghar Yojana, there is no interest subsidy on the capital borrowed. There are policies which promote solar power generation in terms of setting up solar power policy, solar power plants and all those things, but nothing for residential or rooftop or taking off loan and getting an interest subsidy there. But if this is a part of larger industrial project of setting up a plant or a manufacturing location, then it could qualify as for eligible investment. And whatever is otherwise available to plant and machinery will be available to the solar equipments as well. So for other states, like MP, Odisha, we can always get back to you based on your sector in which you operate and the investment that you have.
So, sir, if you are done with the Q&A, we can end the session. Can I conclude?
Yeah.
Okay, so thank you very much, Anandji and Somilji, once again. On behalf of ISFA, Indian Small Business and Franchise Association, I would sincerely thank Ruva advisors for sharing their expertise with us. And most importantly, thank you to everyone who joined us and participated. We will be sharing this presentation with all of you through email, and we look forward to having you with us in our upcoming webinars and initiatives. Thank you once again, everyone.